Like much of the market, Home Depot and Costco have taken a leg down in recent weeks. But our next guest says the stocks are becoming a good place to hide amid the turmoil. Let's bring in Carter Worth of Worth Charting. Hey, Carter, what are you looking at?
How are you? Well, a couple things, and just specific to Home Depot and Costco. When you have a lot of red, as you had today, and you have two big stocks like this that are barely down, it begs the question, well, why are they not down in line with so many other stocks? It's free will, right? People can choose to sell anything, whether they're forced to for a margin call or because they're trying to de-risk on their own. Home Depot and Costco attracted less sellers, had less selling pressure today, and that alone is important. I have a few charts and tables. Let's see what we can divine. So the first is a table, and this is the setup, I think, that's important. If you just sort of simply look at how far below these two stocks are from their 52-week high relative to the S&P, of course, you see here that Costco's down 16%, Home Depot's down 17, 18, and the S&P is, of course, down only 8. So we have the precondition of worse than the market over the past several weeks. Now, let's look at a chart or two and then conclude with the first thing I said about today's relative strength. So the first chart is Costco. 571, its peak, it's down at 481. Again, that's down to 16%, and it's right to, just above its rising 150-day moving average. Look at Home Depot's chart, the next chart. It's the same circumstance, right? Home Depot was 411 on its high, down to 349, and it's just down to and slightly below its 150-day moving average. So if you were to plot these two securities, look at the third chart. This is the two stocks as though they were one security, plotted equal weight, a basket, about 600 billion in market cap. And the basket, the two stock equal weight basket, is down exactly to the 150-day moving average, where rebound potential is high. And then the final table, which is really just the tell-all, and it's a good segue from the first table. What do we know? Today, Costco down 25 basis points, Home Depot down 14, and the market down almost 200. So you have what I think is an excellent setup of preceding weakness that's almost double the market. They're down almost twice the market from their 52-week high, but in a day like today, exhibiting tremendous relative strength. I think if you're looking at a place to put some money on the long side or to maybe hide out, Home Depot, Costco.
All right, Carter, thank you. We will see you in just a few minutes on options action. Steve Grasso, I will go to you. Are these two places that you would like to hide out in? Would you play for this rebound potential, as Carter puts it?
I would not in Costco and Home Depot. When I look at this, my premise is that people want to push, traders want to push these back as hard as they can to those pre-pandemic levels. Now, granted, Costco and Home Depot have reacted and changed people's behaviors out of the pandemic. So I think they get a premium. But I still think Costco can trade down to $325 if you're really looking aggressive, or $390. That to me is a deep discount, and Home Depot can do likewise, can get pretty beat up here. Looking at the level I'm looking at is 245, so maybe 300 to split the difference.
Costco has a forward PE about the same as the Netflix forward PE, as we mentioned in the first segment of the show. I don't know if that says that Netflix has gotten much, much cheaper, which it has, or Costco is overvalued here, Karen, and I'm wondering where you stand on this.
Well, from my book, I have this tiny toe of Netflix and no Costco. So I do have, exposure that I consider similar, which is Target, which is the biggest position, and I have some Walmart. All of that having been said, I would rather, if that was the question, which it sort of wasn't, I would rather own Netflix at this multiple.